We are back with Daily Day Trades YouTube. There are a lot of strategies out there, a lot of videos telling you how to do things, but rarely do they actually go into the actual trades. So today we're going to go over some real trades that we had this week, see what we did right, see what we did wrong, and then learn from those mistakes and see what strategies we implemented. First trade to go over is these plug calls that we got. We got 6 to $9 calls and paid $40 a piece for them. This was intended to be a swing trade initially. We got these contracts about right here, and why did we get them right there? Well, if you look at this throughout the day, it's a very, very consistent chart, and this is purely a momentum trade. When something is just going up this directly, almost like a 45-degree angle, then it's usually a pretty good sign that they are going to continue doing this. Now, we did have a little scare here where it came down pre-market before going back up the next day, but altogether we were able to implement the strategy that we wanted to do. In this case, we wanted to buy them on that day and then sell some of them for a profit to make sure that our remaining contracts were risk-free. And to do that, you have to take enough profits to pay for the contracts that are remaining in your portfolio that haven't been sold yet. So we sold most of them at 0.53, took 33% gain. Not as much as we wanted, but it did end up giving us just a few free ones to carry for a few days. And now we have those contracts until they expire next Friday, and there's not any risk associated with them. Altogether, no matter what happens with that, it'll be a winning trade just because we were able to have those contracts. On the trade alerts, I use a variety of different strategies, and this is a perfect example of that. These Palantir puts, they expire on next Friday as well, June 2nd. This screenshot was sent along with it, and you can see here that I did circle the RSI. I don't typically make trades just on a single indicator, and this trade is no different. The RSI is basically just explaining what I'm thinking. This stock is a little bit overextended at this point in time, so there is more likely to be a run down than there is to be a run up because it seems like the demand is probably slowing at this price. Now, if we go over to the chart of Palantir, it may not look like it, but we were very right in this case. We bought the trade right here on the 23rd, which means that anywhere inside this little box right here, anywhere in that negative 8% that it swung, we were able to sell it during any period of time over that time frame. What I ended up doing was once again making a free play, but in this case I took a lot more profits than it took to actually make it free because we weren't looking to swing this a long time. We were buying it with the expiration for next week. That didn't necessarily mean that I was going to hold it all the way until next week. I just wanted to have that time to have a pullback, or if it were to go up, then we would either have time to wait for it to go back down, maybe average down, because if it were to keep going up like that, then averaging down might not be a bad idea. We didn't have to think about that, but that was an option that we had. Instead, we ended up getting a couple 100% actually, because we sold them for 60 bucks and we only paid 17. I ended up selling the rest of this play later the week because I did not feel like betting against it with all of this momentum building up. How could we have screwed this up though? This would have been a really, really easy one to screw up because if you get greedy and it goes down here, you might be thinking, oh wow, it dropped 8% in just one day and we already have, a couple 100% gain. Let's see how far we can take this thing. When we're trading, we're inherently speculative, but we don't want to be that speculative. We want to still treat it like money, right? So if we were to hold on to that when they were at 60, we would not only be risking the money that we put in, but also the money that we had gained from being correct in the first place. It's simple risk management. We just wanted our money back, and we wanted more money than we started with, and that is what we did. After we sold most of the contracts, I could have very well just held on to the rest and not sold them for a small loss. That was just the decision that I made at the time, and there's nothing wrong with holding on to it and just seeing if maybe it does continue to drop lower and lower and lower. It just depends on the trade. You got to be the judge of that. If you do want to see what I do with my trades, there is a link in the description of this video to the trade alerts, which is what we're reading off of here. The next trade was Upstart 526 $24 puts at $61 a piece. Those would expire the Friday after I bought them, so we only had a few days left until expiration there. This is an example of how not to do a trade. This was a similar setup to the Palantir trade, and I was treating it basically the exact same way, except I did not get contracts that expired, a couple weeks from now. I got some that expired just that Friday. Nothing wrong with that at all. You just have to be a lot more cognizant of the risk that you're taking on and, be quicker to sell out when the play is down. I did not do that. So I got these around here. It seemed like a pretty good place to buy it, a little bit overextended, and there were a lot of issues with the China stocks. That being said, SPY was on a major run, so I was kind of betting against the market here in terms of it just being able to turn around on its own. It ended up opening much higher the next day, and we had already held through some losses here and decided to swing it anyways, even though there were only 2 days until expiration. So it opens up here, and at this point, we're pretty screwed. If it stays at this level, we've lost probably 70% of the money, maybe more. And this is what you don't want to do. We waited for luck to take over, basically. So this dropped 14.5% from the point where it opened to the point where it closed that day, and we were able to take a win on that trade. But that is not the way that it will happen every single time. That is not even the way it'll happen a third of the time. Because guess what? I did almost the exact same thing with the Palantir. I used the profits from the previous Palantir trade and bought some more that were weekly contracts. That was around the same time that I bought the Upstart play, but you can see here that the Palantir did not pull back nearly as much, and they didn't close the week going red like that. Those contracts did go to zero. Contracts going to zero is an avoidable mistake if you want to avoid it. Of course, I did want to avoid it here. Sometimes you buy a swing trade and it's all or nothing, where you're either going to hold it and make a bunch of money. It was a super rare occurrence where I just got stuck in it. I was already down like 40% after a day, and I really had no way to get out of it except for sit, hope, and pray. That's exactly what we did with Upstart. We made 80% on that. It worked out fantastically. But on Palantir, we lost all of the money. Like I said, I don't do this very often at all, but when it does happen, I do get a little frustrated with myself, think about what I could have done differently, and that took away probably half the profits that we made on the previous Palantir swing trade with the options that expired next week. One thing to keep in mind while trading is that profits, aren't always necessarily something to play with. Just because you made money on something doesn't mean that you can lose that money. Those dollars are still worth the same amount as the other dollars in your account. We finished up the week with a really basic day trade on snow. This was something that had earnings, gap down, had a little bit of a rally back up, really big weakness right here. We shorted it with a very, very tight stop loss so that it wouldn't go back over this VWAP by very much. That is a classic daily day trades pattern to trade. If you are on alerts, you will see that very, very often. And we ended up with a 71% gain there. That's just some examples of some trades in the real world and how we reacted to them, what we were looking for, what strategies we're using, mistakes that we made, and just kind of going over the realness within these trades. And I don't know if this type of video is something that people want, but if you do, leave a like on the video or comment and be like, hey, that was helpful. If it wasn't, also let me know, and I just won't make this type of video again. So be sure to subscribe to the channel and like the video. And if you want all of the trade alerts and education, there is a link in the description. You can start that free trial today, and it will be free for the entirety of next week. You can see if you like it and cancel if you do not. Hope everyone's having a great Memorial Day weekend. Everybody have a beer for me because I cannot. I'll see y'all on Monday.